Good morning everybody, it's Gerry Hart here and welcome to this special 2-hour practical tax update webinar, a special concentrating on the budget and the finance bill. In fact, to be correct, finance number 3 bill 2011, which we understand will eventually become the Finance Act 2011. Tax administration, I think, is about up on your screen. And very interesting what has come up, and this is very likely to actually come in very soon, and that is a new timetable for future budgets and finance bill. This comes from the House of Commons Treasury Committee, which has proposed a particular new timetable, which we understand is likely to get through, and the aim is better scrutiny of tax policy and legislation. But for us, in our day-to-day work, it will make a difference in terms of our the tax planning opportunities. So what we're looking at is, in due course, a spring budget as normal, but in which policy proposals will be announced for consultation. Then draft finance bill clauses will be published late summer, so you can see plenty of time for consultation to take place. The actual bill will then probably be published in the autumn, and then the Finance Act itself, with the new legislation, which was first considered way back in the spring budget, that will be published around the end of the calendar year. View is that the government should be looking at a possible merger of income tax and national insurance contributions, which, I don't know about you, I find difficult to envisage, because if they did have to do this, they would have to admit that the top rate of income tax, if we call NIC a tax now, the top rate of income tax isn't 50%, it's 66%. And I think politically that would be difficult for people to accept. They're talking about aligning the treatment of employee benefits and also simplifying some minor ones with a de minimis limit in particular. They're suggesting a complete review of inheritance tax and also trusts. I don't mean trusts in connection with it. A little bit more detail now, and there are some important changes compared with the original proposal. This is the new pension scheme regime coming in on, what, Wednesday, I guess? Yeah, it is on Wednesday, so any planning before then is a little bit late. And as you know, the coalition government said we want to do what the previous government announced, which is to restrict tax relief on pension contributions, but we're not going to do it in the complicated way the previous government proposed. Instead, we're going to restrict the amount that you can put in. But when you can put that amount in, you will get tax relief at your top rate. So specifically, the lifetime allowance, the maximum amount anybody can have in their pension scheme for the new year coming in, is going to stay at 1.8%.